Welcome everyone, and thank you for joining today's webinar on addressing the impact of COVID-19 on gender savings groups. I'm Dieter de Smet and I'm the Policy Manager for the Financial Inclusion Peer Learning Group at AFI, and I will be supporting today's webinar. I'm very happy to see there's a strong interest in today's topic, and I'm very much looking forward to a lively discussion after today's presentations. We have a lot to cover today, so without further ado, I would like to welcome Chee, the Chief Operating Officer of AFI, followed by Nomcebo Hadebe, the FISPLG co-chair, to provide their opening remarks. Yuen.
Thank you, Dieter. Ladies and gentlemen, warm greetings and welcome to everyone. I hope you are safe and in good health as you join us for yet another interesting webinar. Let me open this FISPLG webinar by thanking everyone for your support and time to join us, regardless of the circumstances on how and where we work and the different time zones we are all in. It is encouraging to see that FISPLG dives deeper on the technically very relevant topic on the impact of COVID-19 on gender savings groups. And it is indeed very rewarding to see over 230 plus participants from across the network who have signed up for this working group webinar. This high level of participation is a manifestation of AFI's relevance as a member-driven network and the importance members place on their Dinara Action Plan commitment to increase the number of women with access to quality and affordable financial services globally and close the financial inclusion gender gap. We are heartened to see the progress that it is already being made across the network and further encourage members to use their COVID-19 policy responses to accelerate the rate of women's financial inclusion and fulfill your pledge by the end of 2021. To ensure the progress we have made on financial inclusion over the last 10 years is not lost through COVID-19. Now, more than ever, we have the responsibility to show solidarity to each other. Financial inclusion, particularly for women, has a key role to play in both the mitigation and social economy recovery from COVID-19. It can build financial resilience across all vulnerable groups and act as an opportunity for policymakers and regulators to look again at their legislation and regulation and revise and adapt through a gender lens so that the recovery we see will be both green and gender sensitive. We are very much looking forward to the technical presentation organized by FISPLG today, where we will gain ideas and understanding of how to develop these rapid responses and how gender savings groups can be a key enabler for increasing women's financial inclusion. We want to take this opportunity to draw your attention to AFI's COVID-19 policy response project that provides substantive learning opportunities on policy responses for financial regulators in developing and emerging countries, as well as concrete in-country implementation support for members who are severely hit by the impact of health crisis. We also would like to emphasize the opportunities gender-inclusive finance can deliver in the aftermath of the outbreak of COVID-19. With this in mind, AFI will roll out a strategic initiative on gender-inclusive finance and COVID-19 in the very near future, which will start with a high-level exchange of the AFI members. I wish you all a fruitful discussion at this webinar. Thank you very much.
Thank you, and we would also like to hear from Nomcebo. If Nomcebo is online, I would like to ask her to deliver the opening remarks as well. Nomcebo, are you there?
I'm here, Dieter, and the rest of the members.
Please go ahead.
It's a good afternoon from the side of the world in Africa. It's a warm but very cold day. Ladies and gentlemen, a warm welcome to all the AFI members, partners, and stakeholders and the AFI Management Unit. As the co-chair of the FISPLG Working Group, I'd like to welcome all of you to this FISPLG webinar on behalf of the leadership team. Indeed, it's coming at a very different time in our lives. The Financial Inclusion Strategy Peer Learning Group was established as a support mechanism for countries developing and implementing financial inclusion strategies. We are now operating with 5 subgroups, including the Gender Savings Group. It is an active working group with 62 member states and member institutions from 57 countries. The technical webinar on Gender Savings Group was originally only open for FISPLG members. However, COVID-19 has impacted the existence and functioning of this Gender Savings Group, which help women adapt and increase their resilience to economic shocks. And therefore, we felt it was appropriate to open this webinar to the wider members of the AFI working group. Indeed, the times have changed. We are now going to be living with COVID. Gender savings groups can play a key role for those excluded from the financial system to take their first steps into formal financial inclusion. They can also provide community support, social protection, and education, as well as as we will see in the following presentations. They play a key role in many communities and can help women adapt and increase their resilience to the economic shocks they currently face. We hope, as the FISPLG leadership, you will gain valuable insights from this webinar, and are looking forward to a dynamic interaction among today's participants. We thank you for your cooperation. Thank you.
Thank you so much, ladies. And let me now introduce our speakers for today. And we're very fortunate to have these distinguished experts here today with us. We have Waringa Kibe, who's the country director for Access to Finance Rwanda, and AFR stimulates the development of the financial sector in Rwanda by removing systemic barriers and by putting the low-income people, particularly the poor and women in rural areas, at the center of its interventions. We have Aisha Rahamatali, who is the Regional Advocacy Coordinator for CARE International, and CARE works around the globe to save lives, defeat poverty, and achieve social justice, and puts women and girls at the center of their activities, because poverty cannot be overcome until all people have equal rights and opportunities. And representing the AFI members, we have Dr. Gould from the Central Bank of Liberia. And Dr. Gould is the deputy head of the Financial Sector Development Unit at CBL, and is also leading the Gender Savings Group's knowledge product within FISPLG. Last but not least, we have Helen Walbey, who is the head Gender Inclusive Finance at AFI, and her team supports members to deliver on their Denaro Action Plan commitment to halve the gender financial access gap by 2021, and also promotes greater gender diversity and women's leadership within AFI member institutions. A warm welcome to all the speakers, and thank you so much for being here today. So the agenda for today is as following. We have a slight change. We will begin with Aisha, who will focus more on the COVID-19 responses with regard to gender savings groups. After that, George will explore how policymakers and regulators can support gender savings groups. And hopefully Waringa will come in and then present gender savings groups in general. And finally, we'll round off with Helen, who will conclude with a presentation on COVID-19, financial inclusion, and gender. So I would now like to call on Aisha to deliver her presentation. Aisha?
Yes, thank you very much, Dieter. Hi, everyone. We have a presentation, right? Yeah. Okay, I'll wait for my slides to come up. Really nice to see names that I've seen before and to reconnect with the AFI membership. Sulita, are you going to share the presentation or? Okay, it's coming. Great. So while the presentation is coming, I would like to thank AFI for associating CARE to this important webinar and to engage with you all as policymakers. So the recent development, related to COVID-19 have shown us that savings groups are actually adapting and trying to find a way to respond. As Nomcebo said, we are seeing the resilience of these groups. Not only to support their families, but also to try to diversify their income generating activities and keep going. And during this presentation, I'm hoping to show you how they've been adapting. how CARE has been supporting them, and really hopefully have a discussion with you all about how do you see the role of the policymakers that you are in ensuring that these women in the informal sector are supported as the impact of COVID-19 is actually moving from health to other issues. Next slide, please. So most of the countries where CARE is operating, like the whole world, have been affected by COVID, you know, with closing of borders, restriction of movements, even if now we're seeing things kind of changing, major cities and countries being blocked from the other parts of the countries, curfews, and government's regulation around social distancing, etc., which is really challenging the women that we work with. So we've started an initiative where we're talking to those women, really asking them about what are the main challenges that they're seeing. And as you can see on this slide, you know, most of them are really worried about their savings. They are worried about not being able to provide for their families, not being able to pay for their savings groups loans, and even savings. You know, the food is a real issue because we're seeing families not being able to provide for their kids. And we've heard some of them telling us that they're only able to eat once or twice a day. And this was even more difficult during the Ramadan season that just ended in most of the countries that we work in. GBV has come up as a big challenge of this COVID-19 crisis. And of course, you know, we've heard it from across the globe, but we're really hearing stories of women being victims of this issue. And of course, you know, the future, the youth, some of the women that we've talked to have told us about how they are worried about their daughters and sons who are not going to school or doing their small jobs, and, you know, being scared that it will increase banditry and prostitution. So overall, just to say that this COVID-19 is really having an impact on the VSLA savings groups, women that we work with, on the socio-economic impact, access to food, economic resources, of course, health, you know, with the fear of contracting this disease, and the health services that are overwhelmed, and people actually being scared to go to those services. We're seeing a changing in gender roles, and as I said, impact on GBV. The spaces where women would normally meet to share issues and exchange and support each other are being reduced with lockdowns and you know, these social distancing rules. Of course, limited access to water and sanitation, hygiene items, etc. And in most of the countries that where we are, we're also seeing humanitarian access and operational issues more increased. So with that in mind, next slide, please. Our approach as CARE to this response has been really built on our experience with the Ebola crisis in West Africa and the DRC, but also the different situations where we've been responding in terms of conflict and natural disasters, etc. But our main ways of working is really to work with the community approach and really build the trust with the population that we work with, doing no harm, ensuring that we looking after our participants, program participants, our staff, consider their needs and whether they're emotional or material, partnering with others from the community to the local government, national governments, the UN, to ensure that we coordinate in the way we respond. And as I said, engaging with the communities, especially women, is really one of our main entry points in our operations. The way we're doing that is that at the beginning of the pandemic, we conducted rapid gender analysis in the different contexts where we are, where we really looked at what was the impact of the crisis on women, and also how those women were able to respond. We also initiated an initiative called Women Respond, which is really basic interviews that we did with some of the women that we work with. And of course, savings groups were entry point with 3 questions. What impact is it having on you? You know, how are you living this pandemic for yourself, for your community, for your saving group? and what kind of solution are you trying to find to this to this situation? And mostly, what kind of support are you expecting from the different actors in the communities, whether the government, the NGOs, or the different private sector that we engage with? Next slide, please. So what we did is that at the beginning of the pandemic, in collaboration with the Aga Khan Foundation, CRS, IRC, World Relief, and World Vision, we started to look at the way we were responding to the crisis and started to develop guidelines for practitioners that are working with savings groups when it comes to COVID-19. So those guidelines are available online, and I think these are things that we can share with all of you. And what they show us is that we really need to listen to the groups and their needs as a first step. And those rapid gender analyses that I mentioned earlier have been really helpful for that. The second key element is the protection of the groups physically, ensuring that they are respecting all the measures around, safety and getting COVID-19 and making sure that they follow the WHO messages. And of course, the third one is around helping the groups adapt. As you know, the VSLA groups and savings groups are really groups that are created around meeting and being together and sharing money and discussing. And with this pandemic, this is really difficult. And what we did is that we worked with them on different scenarios that can be in place. And really the idea is to discuss with them how they want to adapt and not bring them solution. Again, the solutions need to come from the communities themselves. And of course, at the end, we wanted to make sure that we recognize the gender dynamics and the risks with this pandemic and ensure that the responses that we will be giving reflect those risks. So what does it mean for us as practitioners? How do we support those groups? So without going into too much details, we've really provided recommendations on how to identify savings groups focal points, response focal points, whether it is in the community, in the organization that we work, or in the VSLAs themselves. At the beginning, we really pushed for building a phone number database, because now we won't be able to meet. So how do we make sure that we are still staying in contact? Keep record of the savings groups plan. It can be really, very simple with a simple document. And complement savings groups plan with broader program response. What I mean here is, like, for example, in addition to activities of the savings groups and the adaptation that they will have, we will see how we include, for example, the savings groups in our general food, nutrition, and security program, cash transfer, to make sure that we keep them going. We also worked with aligning with others on the response, as I mentioned earlier, governments, but also a lot with the private sector. Because most of the work is taking place at the community level, and we can't really move from one city to another or from one village to another. Engaging with community trainers and group leaders has been really central to our response. And also, we also try to suspend some of the activities that we were doing in the communities and see how to refocus our resources towards supporting the work around COVID and how we can support savings groups in that process. And of course, at the end, we're really looking at how do we look at the scenarios after the health crisis is kind of measured, what happens after, what will be the impact on the communities. So what to support? So we share a lot of information on the pandemic and how to prevent and to take measures to prevent it. We created a communication system in collaboration, again, with the groups and the communities. We helped group consider adaptations option, including, for example, are they going to share immediately all that they have, suspend some of the meeting without sharing out, continue meeting with modified procedures, hold remote meeting using new technology where possible. And in some of the countries where we are trying to see how we can use digital to hold the meetings and for the group to keep going. Next slide, please. So I will, I'll highlight some of the examples that we have of how the groups have been adapting. As I said, we've shared those guidelines with our staff on the ground, with our partners, but again, the reality is the one that decides how things are going to be done at the end of the day. So without going into the details of all these examples, for example, for Niger, we saw that at the beginning, the groups tried to split into subgroups and decrease the number of people in meetings, but at the end, they ended up stopping going to meetings. And they found a way to each of the members to be able to go to the president's house at a moment to do their savings when possible. They tried to put hand washing facilities at the beginning of each meetings, but at the end, what we saw was really the key role that WhatsApp groups played in terms of for them to keep discussing and ensuring that they have a strategy to keep saving, but also for them to exchange on other issues. And I'll come back to that a bit later. And also, of course, they use a lot of social media, using WhatsApp, again, as one of the key social media that they engaged with, but also Facebook, because some of them would have Facebook, and then the message will be transmitted by, you know, in French we say bouche à oreille, by neighbors talking to other neighbors. So this is one of the way they responded. In Mozambique, they stopped the formation of new VSLA groups, and I think that actually this is something that we're encouraging in most of the groups that we work with. And they use the groups as a way to transfer some of the messages around COVID in partnership with one of our partner, Vayamo, which is a digital platform that we work with. And again, as I said a bit earlier, we encourage groups to share out immediately or continue to save via M-Pesa if they had an account. Yeah. And again, social media, they use also the social fund to buy soap and hygiene items, etc. Next slide, please. Yeah, so in countries like Rwanda, for example, given the government's regulations, groups stop meeting at an early stage, actually. And they've really used the radio. So CARE used the radio in collaboration with some of the groups, SMSs, to really you know, spread some of the messages around COVID. They conducted an assessment to gauge COVID-19 impact on the groups. And of course, our country office really worked with them to, you know, in terms of guidance and how do they continue their activities through the village agents or other group executive, mostly by the phone. We worked with some of the microfinances with whom we work to see how we can, you know, how we can adapt some of the payments and some of the, you know, rearrange the way like groups will be paying back to those MFIs. And from what I've heard from my colleagues, at country level, the regulators engage in order to organize a meeting of the financial sector stakeholders regarding the mitigation of this crisis for savings. Yeah, and I think savings groups were part of those discussions. So in the DRC, for example, as well, drawing from the experience of in the northern Kivu, and the way they used during the Ebola crisis, they used VSLAs as channels for spreading some of the key messages on prevention. They really try to do the same. And they worked with some of the civil society that we work with around engaging men and boys and youth groups, especially around GBV messages through the groups. Next slide, please. I didn't go through all the cases, but I know that participants will receive the presentation, so you would be able to look at them. As I said, not only this crisis is really a health one for all of us, but as we're seeing it's all over, it's really becoming beyond the health pandemic, and we're seeing you know, the economic and social impact of it more and more. And in most of the countries that we work in, and especially in Africa, we're seeing that COVID comes in a context where population have been through many crises, Ebola, insecurity, drought, and floods. And as one of the women that we engaged said, impossible is not for us. So for the women, it's really, for them, they need to adapt and find solutions to support their families and communities. So just to give you a few examples in terms of solution that they've found, like some of the VSLA women, for example, in Niger, have been engaging in their communities and providing food to the poorest families. They now started to work on making and selling hygiene kits as an income generating activities. And one thing that we really saw from the beginning, even before CARE started to go talking to them, is that they took the initiative and really went to the government's institution at the local level and some of the private sector partner to really push and get hygiene kits and food for them to be able to distribute in the community. So we're really seeing the women being proactive and finding solutions. And as I said, they are developing new income generating activities. And for example, in Mali, we've seen women in one of the region selling masks and soap that they made themselves, not only to the community members, but also to local governments, pharmacies, and CSOs. So it's helping them to continue gaining money. As you know, this period, especially in some of the countries in Africa, are really a period for agriculture that is really important. And in Côte d'Ivoire, we've seen women working for each other in some of the fields, especially the rice fields. And for example, let's say if I'm an owner of a field, then my VSLA colleagues or women will work with me without being paid, but I'll pay them when the crop is ready at the end of the year. So it's really like those support systems that they've been able to do. Thank you. So in terms of, you know, one of the key things that we've also told about VSLAs is the solidarity. So they've really worked on ensuring that you know, those groups become a space for exchange, especially around GBV. Yeah, and then I'll stop here, and I'm really happy to continue discussing with all of you. And just to finish, I would say that women have also been raising the issues that the communities are facing in the community and ensuring that the needs of the population are taken into consideration. For example, participating in COVID-19 responses, structure and platform, and also around food security and livelihood, around cash transfer, for example, and ensuring that the right communities have access to the support. So thank you very much, and looking forward to,
Thank you so much, Aisha, and for your insightful presentation. And indeed, we're already running over time. There's so much to say, but the presentation will be made available to all the participants later. I would now like to ask Waringa to step in and deliver her presentation on gender savings groups. And Waringa is going to talk more generally about the concept of a savings group, advantages, and the effect of COVID-19 on savings groups in general. So Waringa, over to you. Waringa, maybe you need to unmute yourself. Okay, maybe we're still experiencing some technical issues here. And in that case, we'll just skip for now to George's presentation. Dr. Gould will present more on how policymakers and regulators can support gender savings groups. And I would like to ask Dr. Gould to start his presentation now. Thank you.
Hello, good afternoon to everybody from my side. I hope everybody can hear me.
Yes, we can hear you.
I can hear you.
Thank you.
Yes, okay. Yes, welcome to everybody. I'm happy to be here. My presentation meaning will be looking at the policy response, regulatory response, the ecosystem efforts in collaborating with policymakers and regulators, and also the outcome. There are a couple of case studies too that we'll be looking at to see the initiative that countries have taken in terms of policy making and to respond to COVID-19, and we have an outcome statement. Uh, this is not the first slide. Can we go to our first presentation slide? Hello? Uh, I think up again. Okay, we start from right here. What can policymakers do to bring savings groups to the financial mainstream? Yes, of course, we have a national financial inclusion strategy and of course national financial education strategy. We do know that women and girls are placed at the center, are the main victims of all of this. So they should be placed at the center of financial inclusion strategy and of course financial education because if you go down further, you'll find out that women are mostly not, fully educated about financial transaction and financial activities as compared to men. So any financial inclusion strategy and financial education strategy should take into account, should center around women there. And we should also be able to monitor and evaluate and make sure that women are getting gaining access into the financial inclusion mainstream. We should undertake collection of and analysis of such disaggregated data on the savings groups. We should consider introducing guidelines for reporting, registering, and monitoring of savings group. You know, savings group, they are informal, they are not registered, and people, they are not known, they are in more or less the shadow economy. So we should be able to find show guidelines, be able to register them to identify them in order for us to be able to monitor and report them. Of course, we should policymakers should also make partner with banks and other licensed or regulated financial service provider and MNO to bring informal savings practices into the formal financial system, while utilizing alternative channels such as mobile money or roving agent banking, and the point of sales devices. Yeah, we must be able to move from the traditional method in which savings groups are operating and be able to link them into banks. We should encourage financial service providers to invest in financial products and services that are tailored to the needs of our savings group. Savings group have special needs, specific needs in the operation, and we, in order to have them transition into the formal financial sector, we need to encourage those people, service provider, financial service provider, to look at products that will be tailored to the needs and that will attract them to come. We should continue to build advocacy around the importance of savings group driving women financial inclusion agenda. So we should continue to speak to them, talk about the benefits, try to erase or let them know about the barriers, the effort that we're making to reduce barriers and motivate them into getting into the formal financial sector. Our key response in terms of COVID and any other interruption that may take place is also stimulus. We should be able to work because president in COVID-19, you find that they are not active. They are losing businesses, they are losing cash time, and they are feeding on the little reserve that they have. And over time, it will run out, and then of course they will not be able to start a business, continue the business or restart the business. They will not be able to pay a loan, and then of course other problems. So we need to have bailout so that we policymakers should ensure bailout so that those that they owe, they can be bailed out, and of course they can be able to encourage people who are bailed out to also own land, to then continue to lend, while also another policy will be cash transfer to provide funding for them and provisions to make sure that they are able to continue after post COVID-19 saving groups are able to operate. Next slide. Okay, well, we talk about other style regulations, or what can regulators do to bring savings group to the financial sector. We look at it from two perspectives: access to basic financial literacy and access to formal financial services. You know that you can have the services, you can have all the opportunities for transition. If people do not know that it exists and they don't know how to use it, you will not achieve the objective you should achieve. Quite frankly, our reports have shown that globally there's a 5% gap between men, male and female in financial education. And of course, the saving groups allow to fill that gap. So that gap, the saving groups should fit in that gap, and by informing them, making sure that they are financially literate about all the different products, situations, and opportunities that they are able to that are there, so that they'll be able to make informed decisions and be motivated to transition. We see that members of saving groups are taught on how money works, how someone manage and invest it, and what loans and interests are. This means that after the first cycle, they could be linked to our formal financial sector. So saving groups, besides just, of course, providing fundings and for their members, to have to provide full detailed education to the members. And this is something that our regulators need to support and ensure. In terms of access to formal financial services, we know that saving groups, they are not just stagnant. At the end of the day, they grow and they become mature. They grow and they become mature. And then, of course, once they become mature, the demand for credit becomes higher. And then, of course, the loanable fund, or the funds that they have in their savings or in the group savings, faces a risk. It has a security risk because, of course, especially dealing with the bars or in the villages and things like that, if you have so much money, you find the risk of burglary and stealing or so. And saving group members desire long-term saving and or reinvest portion to share out in bigger efforts. So another issue that, yes, in the long run, they will raise a lot of money individually, and that money they want to invest, and some of it that they will have, and they will also think about bigger things that they want to do, because of course, if you're in the business and you see it growing and you're enjoying it, you see you're reaping the benefit, you want to expand. It will only be rational for you to expand. And so you need additional funding. So access to funding, regulators are supposed to ensure that that funding opportunities are available. The saving group uptake of other financial products from former financial institutions. So because they are the money available to them, or the loanable fund available to them as group, as part of member of the savings group. And of course, beyond that, there may be individual members can get money from family members, friends, or rest. And that money will not be sufficient as they grow. So they need to do what? Look forward to other formal financial institutions. So regulators are supposed to be able to provide a strategy and opportunity for them to have access. And one strategy could be so for them to inform formal financial institutions about the significance of savings group. Because if you group them together, you know that they are into trillions of dollars. And there's so much money that our formal financial institutions can tap into. And if these people can raise and operate in this amount of money in their small groups, it is likely and also correct to believe and know that they will be able to manage bigger funds correctly and better. And through that, of course, formal financial institutions will make income, and they too will make income and transition their lives. And of course, they should do that. And of course, most saving groups are operating, because we talk creating access in rural communities should also be something that regulators should do. Because most saving groups, they are operating in rural communities, in villages, and they do not have access to formal financial institutions. So we need to regulators need to make sure that they can create access in rural areas, organizing, ensuring mobile money and network and operations, by ensuring you have rural community bankings. Like in our case in Liberia, we have the rural community financial institutions, and you make sure you have agent banking and you have network. Throughout, of course, yes, technology and digitization play key roles in providing all of these opportunities. Next slide. Now we look at experiences of different countries in terms of policy and also regulations. We have the experience of Egypt. Egypt have mainly focused on their own experiences of policy issues on digitization, on digitization and automating the financial sector to include to make it attractive and easier for VSLA and our savings group to have access to financial sector. They have been able to disburse about 30 million Egyptian pounds, or more than 100,000 women beneficiaries in a single year. and they have been able to do that efficiently and without error, and they have been able to also monitor that. Our next case is Ghana. Can we go on? Ghana have mainly focused on partnership, and of course working in the ecosystem with partnership and working in the ecosystem with other partners to make sure that they are able to provide the regulatory services and policy services that will make people to that will transition savings group and support savings group. Our next slide. From Ghana to Zambia. Zambia also ensured that the national financial inclusion strategy is focused on the savings group. They too have been working with in an ecosystem with NGOs and international partners, and have been able to empower women. Then we have India, who are mainly focused in our next slide. India. Next slide. Yeah, we have India, who are mainly focused on women leading and participating in communities, making sure that they are able to produce safety gears and things for people, providing food and things in the community. So they have taken in that approach. They have taken on the policy of caregiving to the community to keep it safe and to keep saving groups in those communities to be safe. Our next slide. Now, all of this, what have been the outcome in all of this approach? Well, if we have with the level of policy making, we talk intervention, we talk about the level of regulations, and from all of our case studies that we have up there, what is now we bring up the plate, what will be the outcome for savings groups to the formal financial sector? Definitely the outcome would be that when you link, and when they are linked to bank, it increases what the members' average savings. It increased from 40 to 100%. And also it will also double the average profit per member. So the members' average in the link to the banking will increase. The average profit will also increase. Of course, there will be decrease because the cost of operating individual accounts will be as high. So when you link the groups to a formal financial institution, it reduces the cost. And of course, if they reduce this cost, it means that definitely it supports the fact that the average profit per member will also increase. It will also have us offer them a stable and cost-effective springboard for poor individuals to start a journey to financial inclusion. Also, it's a good pathway for women too to aggregate demand among low-income women. One of the key things here too, it will also improve macroeconomic environment for better development planning and economic growth and livelihood. Quite frankly, most of the savings group operates in the shadow economy. But when we want to operate in the shadow economy, it means that most of the activities are not captured in the macroeconomic analysis of the country, and not captured in GDP, and not easily captured in welfare of the country, which of course one of the key challenges in making sure that governments are able to come up with appropriate and actual development planning processes. If you look in countries where savings groups are very, very prominent, you'll find the living condition, the poverty condition in those countries are very, very high because of most of the economy is underground, and policymakers do not have the correct information to be able to have a correct development plan, agenda, and program. The revenue intake is very, very low, even though the economy has a fine revenue, fine GDP growth or upward growth, but because most of them are in shadow, they are not able to raise the kind of revenue that they need, and then provide the type of development output to improve people's living conditions. So if you have a policy that supports transitioning of savings group and supporting savings group into the formal financial sector, you erase all of those hurdles, and you are able to improve the macroeconomic environment of the country to improve living conditions. With this, we go to our next slide. Now, finally, we can say that as the savings group has a great potential to increase the financial resilience within communities in times of crisis, and to bring those who are outside the financial sector into the formal financial system in the long term. So if you have savings group and you have these different crises, at least you have some immediate approach in the villages, in the community, that you can deal with, deal and respond to things. Like in India, you see how India, the savings group there are responding to what, creating PPE equipments, providing food, and the rest. So saving groups, in terms of these things, that they can build a resilience in the community. Then, of course, and also there's a need for collection, analysis, and use of this aggregated data. So in concluding with you, once we can get this data hands on, we are able to make more informed decisions for policy intervention in savings group. And of course, we have our immediate discussion on financial service provider and other stakeholders in the ecosystem around the linkages between savings group and financial institution. And we can collectively identify ways to help savings group transition into the formal sectors. So once we have this, and of course we say technology is the answer. So once we have this level of policy making into place, we have this level of regulatory activities into play, and we are into place, given our case example, we are able to achieve these conclusions. Our next slide.
Thank you very much, Dr. Gould. And I believe that the technical problems with Waringa have been solved. So I'm going to ask Waringa once more to deliver her presentation, but I'm going to have to ask her to do this in less than 5 minutes because we're already running over time. Waringa, please go ahead.
Hello, I hope you can hear me now. Just confirm kindly.
Yes, we can hear you fine, Waringa.
Yes, Waringa, we can hear you.
Yes, so I will put slides like this one. What is a savings group? I think most of us know what it is. What I'll just pick from this slide is the fact that they maintain a social welfare fund, because I'll come back to that in the end, and that the non-performing loans are generally below 1%. Next slide. Next slide, kindly. Yes, I just want to draw your attention to what has happened in Rwanda over time. This since 2014, we got those that work with savings groups together because there was a need both from the Ministry of Finance and BNR, the central bank, to have evidence-based decision making. So we came up with a way over the years to collect data. And if you go to the BNR site, you will find the data that I am showing you here. You can trace where are the savings groups are districts. You can trace how many females are being served. And you can see, like for 2018, females were 890,000, males were 279. How much loans were out there? About 8 million in dollars for savings and for loans. You can see the data there. So this basically is to show you when we have data on these savings groups, we're able to make decisions on them. And just to encourage all of us within the countries where we work, that this is possible now with all the fintechs who are out here to actually collect this data periodically, because it helps. We all recognize the role of savings groups in our economy. Next slide. I'll jump this again just to show you that we have more women in the groups, and more of them are rural based. Next slide. I wanted to now draw you to FinScope. We have just released FinScope 2020, and I'm sure many of your countries do FinScope. And just to show you that actually, first of all, to start by saying we have moved from a financial inclusion percentage of 48% in 2012 to 93% in 2020, 8 years down the line. Incredible. And what has driven this? If you see in the slides I'm giving you, I'm showing youth there. Those that were banked moved from about 29% to 39% in 2020, from the last FinScope in 2016. And there has been, yes, I think the slide has moved, but just to show you that all those categories, even the informal, those that have been served only by the informal sector, have moved from 17% to 12% now. It has reduced. What does this mean? Even if the informal sector continues to be a great sector in the economy and an important one, there is more and more people moving towards the formal sector. because like you can see, we've moved from 17% to 12% in 2020. So it's great just to hear about the linkages that Dr. Gould talked about in his presentation. Let's move on. Yes, I wanted to show this slide that the informal sector of savings continues to be important. We have 81% of the people who use both formal and informal, meaning even if I have a bank account, I have an insurance, I still have an informal group that I work with. And we wanted to show you that about 3.9 million save through this savings group, and 2.8 borrow from this savings group. So we cannot ignore this sector, these particular groupings of the financial sector, but continue to provide linkages to the formal sector. Continue, please. Kindly continue. Yes, this one I will dwell on a little bit. The question was, where is your channel for saving? And if you look at the channels shown here, you can see that there is actually an increase between 2016 and 2020 of those that are relying on banks to save. From 14% was saying my channel of savings is the bank, to 21%. Mobile money, and I won't repeat what has been said by my previous presenters, there was an increase from 19 to 25%. If you look at the circles, you know the Umurenge circle scheme within the country where every sector has an Umurenge circle nearby, 21 to 26%. But look at savings groups. Those that say my channel of savings is savings groups move from 40 to 55%. Again, this is to just show us that we need to continue bringing in these groups in our policy making as regulators, as policy makers. Let's move kindly. The next question was asking, so where do you source your credit? And this one we need to pay attention a little bit. When people go to borrow, really, they perhaps may not be going to the formal side to borrow. They may be going more to my right, if you can see the bars on my side. They may be going perhaps more to the informal groups to borrow. Why? Maybe I borrow very fast there. The conditions are less. Yet you have to note that that decreased. Maybe there is less reliance there from 41 to 39, but it's still the highest bar. Others go to the nearest kiosk or shop that's there, family and friends. But you can see that the bank had an increase in people that say, I go to the bank to borrow. And when I dug deeper into that data, I realized that a lot of the banks have now digital financial services. They are using the phone. And because of using the phone, there has been an increase in those that are borrowing from the bank, borrowing from mobile money. Again, continuing to just show the role of the phone in our economy. So that's a good slide to say. So when we begin to say, let us improve credit and how SMEs get credit, you must go back and ask, what is their source of credit? What is their source of savings? And begin to encourage those linkages through digital finance. Let's move on. Kindly move on. Great. I also want to point you to this slide here, because the FinScope is moving further and further away from not just asking, do you have an account? We're now moving to ask, how financially healthy are you? When a shock hits you, where do you go so that you mitigate so that you're able to recover from the shock? So financial health assesses how well your daily financial system enable you or your household to build resilience to shocks, and COVID was a big shock. The data showed us that actually the solutions they get are non-financial. They will still rely on non-financial means. Only 40% relied on financial means, meaning the key question for us is, are there products and services there that support me during an illness? Do you have a form of financial service that supports me when my cow dies, when my crop fails? Because when we ask them, what are the shocks that you face? Many of them said illness. Others said livestock, loss of livestock and crop. Others said death in a household. So really for us, looking at this bar, it's important to note that people were still relying on non-financial means for shock. So that means even in a COVID time, how are they able to recover? How are they recovering? How are they coping? Pointing to a need for tailored form of financial services for these categories of people, for them to be able to withstand shock and build resilience. Let's move on. Advantages of savings groups. Allow me to skip this. I think many of you already have passed through this. Move on kindly. What were the effects? Aisha took us through a lot of this, so I can skip this also. And the proposed one. Aisha also took us through this. What I want to say, just to add to this, is when the COVID happened and we were in a lockdown, remember in 2014, we began to put the savings group practitioners together. We were able to call them quickly to a group and ask what's going on. And they discussed all the ways in which they are trying to cope and support their clients. And Aisha has talked a lot about that. But I want to just point out the usefulness or the role of the MFI and SACCO in supporting this category of people. The MFI remains crucial. That means that when there is a refinancing facility being set up or a COVID response emergency fund within our country, really you cannot leave out the MFI. And I am grateful that Rwanda in the fund that they set up, MFIs are able also to borrow from that financing facility so that they can recover in their operations. So it's important for us to keep our eyes on where do the people save, where do the people borrow, how do they withstand shocks, so that informs more of our financial sector development initiatives. Move on kindly. Murakoze, thank you very much.
Thank you so much, Waringa. And we're going to go immediately to our last speaker for today, and that's Helen. And Helen is going to provide her insights on financial inclusion, gender, and COVID-19. Helen?
Thank you very much, Dieter. And thank you to everybody. I'm aware that we are currently at time, so I will be very brief, and I hope you will then be able to take some of your free time to spend looking through the slides in some more detail. So if we move to the first slide. We hear in the news a lot at the moment about talk of the new normal. And I'd like to just highlight this comment from our governor at the Bank of Philippines, who said that we should not be preparing for a new normal. We should be preparing for a new economy. And I think that if we move to the next slide, we can see that the new economy that we should be looking for should be an inclusive economy, and it should be an economy that works effectively for women. We know that women and girls have less economic security, and we know that they have less opportunities to be financially resilient. We've heard our three speakers highlight those points. But we also know that for you, as regulators and policymakers, you can foster greater economic stability in the banking system and enhance your economic growth by making sure that the policies that you enact now through this COVID mitigation and COVID recovery phase are fully gender sensitive, and make sure that women and girls are at the centre of your recovery efforts. So if we move on. Thank you. AFI has launched the COVID policy response, and this is systematic and it's effective and it's highly coordinated across the AFI network. And it is there to help you mitigate the effects of the COVID crisis. So we are there to meet a spectrum of demands that you are likely to have around access to data and analytics, and around understanding what's already working in the network. We've heard some of the members here with the case study examples that Dr. Gould presented of gender savings groups activity that has been highly successful. And we're also looking to support members with their own responses, with our in-country implementation. So this slide covers the key pillars around gender for looking at how to ensure that your response to COVID is gender sensitive. So we're looking at things around how women in your institutions are able to continue with their work, with things like gender regulatory impact assessments and a gender sensitive COVID plan. We're looking at the support that can be given to women SMEs and how we can support women with social protection, including things like remittance fee waivers and unconditional cash transfers. We're also looking at the opportunities that digital financial services provide to women, although we do note that there are risks that women can be left behind if new policy and regulation to enhance DFS isn't gender sensitive. And then we're looking at the regulatory frameworks that you can develop to ensure that women are not left behind and are fully included in the recovery. And that includes building gender indicators into your national financial inclusion strategies, and also looking at women's financial literacy strategies. So I would recommend that you look at this slide in some more depth in your own time. And I will just come on to our last 2 key points. So if we could move ahead, Sulita. Thank you. So you may be thinking, we've had some wonderful information, which we have, and we've had some great speakers this evening. How can we help you? So one of the things that you can do as members of the AFI network is get actively involved in the regional initiatives, the working groups, the capacity building that we are running online, and our peer learning programs. We also have a wide range of tailored support now available for you to incorporate those gender considerations into your strategies and frameworks. So you can contact any of the AFI support team, including AFI-gender, that's our web address, and we will be able to provide you with some specific advice around the in-country support. And also, we would like to thank the FISPLG because there will be, in the very near future, a guideline note on gender savings groups. So this will crystallize a lot of the information that you've heard this evening to give you a key knowledge product to help you support gender savings groups in your jurisdiction. And if you don't yet have gender savings groups, how you will be able to support the development of them as part of the recovery phase. Now, AFI's wide-ranging COVID response is fully available online. We've provided the link here for you. So we want you to be able to engage with this strategic initiative. And as we heard our Chief Operating Officer say at the beginning of this presentation, we are now going to be launching a strategic AFI-wide gender-focused initiative starting in the near future with some high-level events that will be open to the network. And we would very much like to hear from you and have you getting involved. So I'm going to stop because I think that's everything that we have time for, because I would like people to ask questions if they have any. So if you have a question, then do feel free to put it on the question and answer button that you'll find at the bottom of the screen, or on the chat, or if you would like to just take your mute off and ask, then you will be most welcome. So thank you very much for me, and I'd like to thank the other speakers who went before me.
Thank you so much, Helen. And Aisha already answered the question here, but it's a very interesting answer, which I would like Aisha to repeat because it contains elements of digital, rural versus urban, and other elements in there. So Aisha, if you're there, the question was, do you have a segmentation of savings groups for urban and rural areas? How different are the measures for the urban ones? And the person in question, Kalbinda Kawesa, says in Lusaka, Zambia, there's an interest in internet mobile banking, investment products, or high interest savings accounts for access funds that can't be lent out. And I was wondering if you can elaborate a little bit more on your answer, and maybe also Dr. Gould can come in from a regulator's perspective on what the possibilities are to include digital to bridge the gap. Thank you.
Yeah, thank you very much, Dieter. Yeah, we have actually several questions that I've tried to answer in the chat, but on that one specifically, I think Waringa also would have a lot to add, because I know that urban versus rural in Rwanda is very specific. I mean, we're seeing a difference, I have to say, between East and Southern Africa, where all the digital M-Pesa online systems are already in place with West Africa. So, and we see, again, as you said, the differences between the rural and urban. So we'll see, for example, urban groups being more attracted to using mobile money for saving and for loans, etc., a bit less in rural areas. And it also has an impact in a way in this COVID crisis, because we will see groups in urban areas being more, recurring more to mobile possibilities. Again, one of the questions that I raised and that I said in my answer, it's yes, I think there is a difference in the way they operate. I think the context matters a lot. and how much the whole digital and is clear in the country, is in place, But at the same time, we know that many of the women that we work with are illiterate. So how do we make sure that they use those systems in a way that also protect them and that does not put them in danger? But I'm wondering if Waringa has more to say on that.
I can add, Aisha, I think I'll just add shortly to what you're saying. I think it's always easier to digitize or digitalize groups that are in the urban area because they are nearer technology. And if you look at what I said about the groups in the Rwanda map that we had, 74% were rural, 26% were urban. So a smaller percent, 26% is urban. That's the one that can easily get on DFS. Why? Because when you're making, digitalizing the operations of a group, you have to think about where is the nearest agent? How do you train these people? So issues of logistics, issues of infrastructure, issues of the village agents and the support, those ones come up. Issues of the ability of the fintech to provide the resource that to reach this group was a major issue because the fintechs usually are small and they do not have enough staff to go and train. So it's always easier to digitalize urban groups, but the majority are rural. So we really need to think about that particular piece.
Thank you so much. And I just wanted to reiterate that the Q&A is open for everyone. So if you just use the raise hand function, we can identify who you are, and then we'll unmute you, and you can tell us your question and who do you want it to direct it to. So please, if you have any questions, please come forward.
That's a response from me, right?
Yes, Dr. Gould, there is one for you. I'll just read this out for people who may not be able to see the screen. This goes out to Dr. Gould. And can you elaborate more on the stimulus by loan bailout? Thank you.
Elaborate more on the stimulus by loan bailout. Yes, during this COVID-19, you found out that people, the savings group are inactive. They are not able to go to buy the products and carry to market. Markets are closed and they are not into business. And as a result of that, of course, the money that they have that they should be operating during this COVID-19 period, they do not have the opportunity to turn it over, operate it. They then began to use it for consumption. And over the period of this pandemic, that consumption will deplete the financial resource that they have. And when that financial resources that they have that is depleted, they go out deeper into poverty. And of course, if for any reason it is over and now, the life should continue for them. They do not have the opportunity to raise that money immediately. The VSLA does not have the money, and then of course they are stuck there in poverty, and then of course with all the other negative attending factors. So there to be a policymaker should have to come up with a bailout to do one or two things. The first thing first is to do what if they have loans, the bailout should be able to do what pay those loans. So you go to the financial institution and pay those loans for them, and then encourage or motivate or ask the financial institution to lend to them so that they can continue to invest. And also, even those who do not have loans, or maybe the bank may be reluctant to lend because of that, they may be buying time and also trying to observe. So the bailout, another part of it will go to direct cash transfer or direct loan to individuals or VSLA for the members. So that will have the bailout and should work. Because there will be a condition where the businesses are not taking place again, the economy is stopped. So people will be consuming on the income that they have. And as a result of that, it will deplete. When it's depleted, they don't have additional income. They will need money to continue to do business and to take care of their families. Because they did not pay the loan that they were owing, bank or institution who don't want to give them money. So as a result of that, the bailout must pay that loan and encourage the bank to begin to lend to them again. Bank may not do it, or they may not do it immediately, and they need immediate change. So there should be direct loan to them or cash transfer to them that will make them to continue. On the issue of the digital, actually digitization for financial inclusion cannot be overemphasized. It is very key. It is a cross-cutting issue, and it is very key. Especially these savings group operates in rural communities. They operate in rural communities where infrastructure is of all the ecosystem infrastructure remains a challenge. Road, communication, electricity, everything remains a challenge. There's no access. So the easier and fastest way to be able to provide them to transition into financial inclusion services will be through our digital means, whereas through agent banking and agent banking, mobile money operation, and the rest. And the good thing about that, digitalization will cause the economy to operate amidst these challenges. And because these people now, digitalization will make them to be somewhat in a somewhat formal sector. And by them being in a somewhat formal sector, government and banks will be able to track the activities that they are making. And to a large extent, if banks can also make more money, government will be able to do get more income or raise more tax from them. It can also help to accelerate government to increase government spending. And then, of course, with the increase in government spending, she will be able to provide those infrastructure that will open up, that will ruralize, or that will open up the rural areas. But as it is, if the situation remains like this, and you do not have the kind of resources, you're not reaching the level of income to be able to finance the development infrastructure to connect rural and urban areas, the situation could remain hopeless and doubtful. So yes, digitalization is the key, is the way to go, because it will integrate people into the formal financial sector. It will provide opportunity for increased income in the formal sector. It will provide opportunity for additional funding for development. And then, of course, people welfare should increase, holding all other things equal.
Thank you very much.
I'm very conscious that we are over time, but I'm also very aware that virtually every participant is still online. So, Dieter, may we just take one more question if Dr. Gould is able to give us perhaps a slightly shorter answer, because there's a particularly good question that's come up on the screen.
Yeah, I have a very good one here. Dr. Gould, you talked about integrating an informal mechanism like savings groups into the formal system. So linking savings groups to the formal financial institutions. And Sanga Lusumpa asked this question: how are you going to do this? How are you going to recognize an informal mechanism? How are you going to legalize it? And what is the point of view of a central bank? And how are you going to go about it? It's a very important question to answer. How are you going to integrate an informal mechanism into the formal system?
Okay. We are the way to go about that is that you have these informal groups. You would encourage them to open bank accounts, because the condition there with them will expose them to risk. They have some money and they are not keeping it very well, so they are exposed to security risks. So by that, they are looking for alternatives. They are looking for alternatives. So now you create a regulations, or you encourage them to do open bank accounts. So now they'll deposit those money in their bank account. Once they have deposited.
Sorry, can I interrupt? So how would you like to do this? Because you have a group of people. Are you going to ask each an individual person to open a bank account, or only the...
No, the group, the VSLA will open a bank account. Because we said that one of the issues that they face, that the cost of managing an account individually is very high. So the VSLA will be the one to open the account. And then, of course, as the money grows, the individuals will also want to be able to expand. And one individual wanting to expand because now they have the money saved and they are making more money, they want to reinvest. As a result of that, they will also ask, because the money you have from the VSLA is limited, and from the normal sources like friends, family, whatever that you have been lending money from to invest also is limited. So now that you have an account in the bank, and the bank sees the level you have a turn over, the bank can also do lend to the VSLA, meaning that the VSLA will have more money, and then what members now can decide will have access to additional funding for more investment.
Thank you very much, Dr. Gould. Helen, did you spot another interesting question, maybe a last one?
No, we both got caught by the same one.
Okay. So we will, all the questions that have been directed at the speakers today, and all the ones that have not been answered, we will save them and we will get back to you later on with a written response. I think we are close to running over time. So I think maybe that's my cue to start wrapping up. I would like to thank everybody for being here today, and maybe we talked about a lot today, and it's very difficult to summarize everything, but if we have 4 points that we can use as key takeaways, is that gender savings groups are very important, not only from the angle of financial inclusion, but also from the angle of women empowerment. And even though COVID-19 has impacted these savings groups, there are specific policy responses and coping mechanisms to mitigate the effects of COVID-19. In addition, policymakers and regulators have a very important role to play with regard to the integration of savings groups into the formal financial system. And very important point, the last one, AFI is here to support the members with initiatives that accelerate financial inclusion, and specifically with regard to gender focus. So we would like to thank the speakers for today for sharing their expertise and experience, as well as everybody here who attended the webinar. We hope you enjoyed it, and we're looking forward to seeing you again at the other AFI webinars very soon. Having said this, I would like to wish everyone an excellent rest of the day, and please stay safe. Thank you.